Chad Moyer with you here on the Rural Radio Network. Good afternoon. It is time for the Channel Final Bell. And joining me on today's program to break down today's trade, talk a little bit about the grains and livestock getting started here this week, it's Sam Hudson, Cornbelt Marketing in Illinois. Sam, thanks for joining us here today. Let's take a look at those settlement prices here right quick. We've got corn, starting in the grains, corn down 9 to 11. Soybeans are going to be down 1 to 6 cents. And then wheat in Kansas City, we're going to end up down 11 to 12. Minneapolis down 10 to 12. Chicago wheat down a like amount, 9 to 12 cents as well. Okay, coming back from the weekend, Sam, what are your thoughts? What was kind of the attitude of the grain markets as we got started today?
Well, we finished last week, Chad, on a little bit of a better note with, slight optimism that the fact that, U.S. and China were getting together in London. Those talks are going to continue through Wednesday of this week, but I don't know how much it can actually yield in terms of benefit, not only for our markets, but just in general. There's going to be a lot to wade through, and I think the best case scenario there is just, signals they're going to continue to work through that and, maybe a backing off of some of those, escalatory measures in the meantime. I don't think we should expect to get, a quick trade deal here. It may last into, this next quarter at a minimum, or even the fourth quarter. So while that happens, there's not a lot of fresh news on the tape. I think the biggest thing is the fact that, we're going to expect to see better condition ratings here this afternoon. I think you're going to see continued, planting progress for any of the late areas. The weather forecasts, all winter we've been sitting here talking about the possibility of, some longer term maps looking hotter, drier into the pollination time frame into late June, July. And there's really just nothing out there that boasts a lot of confidence that that's going to take place. So the market's offering a lot of contentment to just kind of, lay here and kind of play the waiting game. And in the meantime, we have, a general lack of volume to provide some vacuums up and down.
Yep. Sam, let's talk about right at the beginning of the day. It looked like we actually had some decent numbers on the weekly export numbers. Thought maybe that would maybe give us a nice jump at least to begin. Didn't turn out to be the case, huh?
It didn't, and it's just kind of the status quo. Everyone's looked at the same numbers. We know that they look pretty good. I think, sales and shipments, I believe, are both 6% ahead of the USDA's forecast. So I would expect that in Thursday's data set here for the June WASDE, we see a bump there. But it's hard to move that needle fast enough to make a real meaningful change on the balance sheet. It could, very likely equate to some smaller carry-ins. But this new crop, acreage, the stocks figures that'll go into that, and ultimately the final yield are going to be a much larger ticket item, and we'll get another look at that here at the end of the month.
Mm-hmm. All right. Well, let's kind of break it down, talk a little bit about each commodity and kind of the storylines there within. Corn, again, we ended down 9 cents in July. December was down 11 and a quarter at the settlement prices. I guess, coming into a new week, what are the stories? Like you said, exports were good for corn, but what's at play in the corn market right now, Sam?
Well, we continue to see those funds, build short positions when we see a weaker market like this. But like I said, we're not seeing a large amount of volume. The producer side, just the industry side of the coin here is kind of light. Everyone's just playing that waiting game, as I mentioned. And so, end users, commercials, they bought a lot, back in that January, February, even in the March timeframe when markets took off. And then since then, we've just been chewing on that. And so it doesn't create a lot of, concern because the commercials have enough to chew on, the end users have enough to chew on. And even though we see these tight carryout numbers, no one's really realizing it. And so if there's going to be a hole, we won't find it until August or even until we start harvest of this new crop. And by then we'll be trading that supply and demand of everything. And it seems like right now the market is just, like I said, fully content to expect the seasonal weakness that we typically get this time of year once the crop is in and we see those non-threatening weather forecasts, even if we are seeing a much tighter carry-in than normal.
Yeah. And like you said, that idea of just being satisfied with what's there right now, you could probably say the same thing for what's going on in South America, right? As the harvest continues down there.
Yeah. That's right. And there's two edges to that sword just the same, I would say, because we've been looking at the possibility of a huge crop down there for how long? It's just been kind of the expectation. That's the good news in it. I don't know that we have to completely railroad prices just because all of a sudden we get this new big number. We've all been looking at that for quite a while. And despite those crop sizes, the U.S. has hung in there very strong on the demand side of things. I think you're going to finally see more of a turning to South America out of China, but that's seasonally what should take place. We're seeing bigger jumps in Chinese imports of soybeans. That was kind of a concern going into midsummer as well, just the demand to China in general. And so the fact that we're seeing those large imports now, they're going to stock up on those South American soybeans. Ultimately, they have to buy some from us at some point anyways, just to not put all their eggs in one basket. But my guess is they hold off on doing so until we actually have one of those trade deals. and then they can put those purchases towards their obligations in that deal.
Yep. All right. Well, you mentioned soybeans. Let's talk about that. July beans down 1 1/4. New crop November was down 6 1/4, settling out today. And then bean oil, bean meal, both of the products. So for soybeans, a clean sweeps lower. Again, what are the storylines to start the week for soybeans?
Well, if you just look at it week over week, or really over the last couple of weeks, the beans have fared okay, with a little bit of a recovery last week. They struggled here a couple of weeks ago with some of these renewable fuel obligation deadlines and headlines, and just talk about what that policy was going to look like in general. We don't know anything more today than we did at that point in time, and we've seen a decent little recovery effort in that bean oil, in the November soybeans as well as the front end here. And it just, like corn, I think we're going to find some contentment in this 1025 to 1050 area on November beans. And what I'm really wanting to keep an eye on here is an area that could just become an area of congestion here for the next week or two. You've got the 100-day, the 200-day moving averages all around this 1030 to 1035 zone, and it just feels like we're going to tread water around this mark until we see what those acreage numbers and stocks numbers look like here at the end of the month. And if we see any meaningful backing off of total area, and the beans are involved with that, then they may try to hold that line until we see what that weather looks like in late July or August.
Yeah. Okay. So as far as beans go, what are we waiting on for the WASDE this week? Anything there?
I don't think so. These numbers should actually be much quieter, I would say, than corn. You can infer that we could see a bit of an export jump, but I don't think you can adjust any of these numbers enough to really matter much. When you look at the average trade guess for the carryout, I think, or for new crop, or even the old crop for that matter, I think the average trade guess isn't to see more than a change of like 2 or 3 million bushels across the board there for carryout. So kind of a punt here altogether on soybeans, and I think it's going to come down to more about sentiment on area in general here as we get into July.
All right. Thank you so much. Again, that's Sam Hudson with Cornbelt Marketing in Illinois. Stay tuned. We have the second half of the Channel Final Bell. It's coming up next here on the Rural Radio Network.
Weather, decent expectations for this crop. There is some concern about some disease here domestically, but that typically means we've been wet enough to probably have some good yields. So it's going to come down to timing. What kind of conditions are we going to see right as harvest is starting to get kicked off? And if anything is going to make that weather, those disease situations even worse. Simultaneously, you actually have some drier conditions, further north. And so that's something to think of. Ultimately, though, keep in mind, from a global demand standpoint, we're still kind of the bottom of the barrel. We have such high variable storage rates here. We're basically the last point of destination if the globe has to panic. And so we need to see other people run out first before we can really get optimistic about, seeing a different pricing structure. I think in the meantime, you're probably going to see some, front-end weakness in basis and spread simply because we're getting into another harvest no matter what. And we haven't been exporting, a large amount of wheat, above USDA expectations like some of these other markets. So I think the biggest thing to exploit here would be if we ran into a headline or an immediate supply disruption, because the funds are still holding a very large short position there. And anything, to get them spooked out of things over last week's high would be notable.
Yeah. So last week we were talking about how hot it was in China and some of the wheat producing areas. So if they're short, you're saying it's going to take some time for the world market to get to us? Is that what you're saying?
Yeah, I believe so. It's one of those products that's, raised simultaneously all around the globe, northern hemisphere, southern hemisphere, east, west, wherever you go. So it's almost like you need to see two consecutive problems or a geopolitical flashpoint, for example, like what we saw in Ukraine. And that's something that's, still kind of boiling over there. We'll see how that turns out. But that's probably the biggest thing that would, create something of substance, at least in a short manner.
Yep. All right. Well, let's switch and talk about livestock for a few minutes here. Live cattle, feeder cattle, hogs, they were all kind of mixed right up to the very last few minutes of trade, and then we actually ended higher. Most of the contracts did end positive. Coming back again from a Monday after record-breaking Fed cash cattle trade last week, what are your thoughts, first of all, in the cattle futures today?
Yeah, that's right. Agree. Kind of an interesting, two-sided affair for most of the day, and then that last half hour was just pretty impressive. It just seems like no one wants to go home short those markets. Continue to see some indications early this week that we're going to see, cash trade maybe even $3 to $5 higher again, and so that's going to keep things, somewhat frothy here on the front end. We've continued to trade such a big discount here in the live cattle futures to cash, consistently. And that convergence is taking place now. And so we'll see what that means for the August contract and if it can get up and really go. But when you have cash prices, that 230 plus mark, it's hard to be too negative here. And from a margin standpoint, it's phenomenal. But the risk moving forward is also just the same.
Yep. So I was looking at the National Direct, cash trade 78,000 last week. Only 13,000 was for deferred delivery. I mean, it just puts a lot of power in the cash in the feedlots' hands, right? It looks like that futures will continue to follow cash.
Yeah, and that's what you have to expect until something gets derailed here. And there's been talk about packers and what they're going to do. Maybe they slow down or shut down or whatever. But at the end of the day, if that demand is still there, the risk is that they have to come back to the well if they shut that down. And so, again, double-edged sword all the way up, all the way down here. The higher we go, sometimes the tougher it is to even expect that herd expansion. And you got interest rates where they're at here. It doesn't help the cause here, big picture.
Yeah, and then don't overlook hogs. I was reading, hogs July back to 107. We're up above some levels we haven't seen in a while, huh?
Absolutely, and I'm glad you brought that up, because from a producer standpoint, I think that's a level, with the time on the clock that we've got at this point, to probably respect. Not going to say that we can't continue higher here. All boats rise in high water, but you don't want to get hung if you get some sort of Mexican cattle headline coming back in here by late summer, and the hogs are overpriced at that point. So definitely check the cards in your deck and see where that risk is. And anytime you can get a big move like this on the front end and can reward it, definitely look at doing so.
Yep. All right. Okay. So that kind of brings us up to present. Turn around and looking forward. We said we had the WASDE this week. What else is kind of key to market trade for this week, would you say?
Well, for this week, I think it's just going to be trying to hold some of these technical support levels. I've mentioned the lack of volume here. You've got farmers who've got a relatively high base price, especially when compared to soybeans, and they haven't been seeing that encouragement to go out here and market a bunch of crops, even though things look good, because they may already be in a guarantee. And that's kept, this market kind of quiet. And so, as I mentioned, if you get, any sort of reason to move things around and you start to get away from some of these moving averages and trigger some technical buy or sell signals, we could start to get some bigger jitters here as we get into the end of the month, because that quarterly data is going to be pivotal in telling us what is and is not possible as we move into those summer months. Let's face it, USDA is not going to come off a yield probably until at least September, whether it goes up or down. And so this gives us, those potentials for deviation, I guess, compared to those numbers.
All right. Good to have you on the air. Thank you so much, Sam Hudson from Cornbelt Marketing, the website cornbeltmarketing.com. Do remember, trading of commodity futures and options does involve substantial risk of loss and might not be suitable for all investors. That is today's Channel Final Bell. It's brought to you by Channel and your local seed pros. Here on the Rural Radio Network, Chad Moyer reporting.